Good morning, everybody, and this is your Dow Jones setup for today. So a couple of bullish setups that are happening at the moment, and I just want to double check. I don't think there was anything left. No, there was nothing more to the left. So I want to just double check where these previous highs were. But at the moment, what happened yesterday, just big up, big down, nothing really to write home about, and we'll look for the range on the lower time frames. But just look at what's happening with the oscillators. They've separated quite nicely, and it looks like they're starting to roll. So this is starting to look fairly bullish in a bullish uptrend. So this was a big move up. This is a half decent pullback, so it's now structure forming. We do have quite a number of results coming out today. We've got both Google's or Alphabet's, and we've also got Tesla. So that's almost $5 billion worth of market cap just on those three stocks. And then there's a whole host of other stocks that are releasing their earnings today. So the big ones are coming after the bell, so nothing will show until the market closes. But yeah, there's always somebody that knows something, so you never know what's going to happen. So just looking at what happened yesterday, buyers were coming in, but nothing really exciting. In amongst all the moving averages, below the faster moving averages, so could be a potential trend to the downside forming. And I just want to put two levels in here. And there is this weekly gap as well, so it wouldn't surprise me to see us come back to that area. And then let's just get it off the weekly. We've got that weekly level now. So this weekly pin bar of last week does still concern me. That is a big rejection bar. So just keep that in the back of your mind when you're looking at what's going on. Big pin bar. So the question is, are we just going to rally again and then form another pin bar, which would be a tweezer top, which would be really bearish, or alternatively, are we going to move to the downside? So the lows of last week are quite important, but we've already got those levels in. So let's get down to where the action is. Now, yesterday, pretty much big up and big down day. Nothing to write home about. And our weekly gap, despite 3 attempts to close it, is still open. So this level of 4,300 is definitely something which is on the cards. Look at my moving averages. They are in a bearish crossover, although they are flat. So flat means range. They are ranging at the moment. Look at my oscillators, flipping to the top, looking for a continuation. Now, big move down, consolidation, continuation. That is very much a possibility, and bear in mind down here you've got another gap, and that's at 40,074, and then obviously 40,000 is also going to be something to pay attention to. So I am sit on hands on this at the moment until we get going in a direction up or down. Now when you look at this on the 15-minute, massive amount of volatility at the market open, just insane, and then it just fizzles out sideways. So there's no signal for me at the moment, and for as long as we stay below the 150 on the 15-minute, this is not an option for me to be long, and it's not an option to be short at the moment because of the structure I have below me. So I'm kind of sitting hands. I'd want to see a break above the highs of yesterday pretty much, and a retest and defend that. So at 40, let's just say 4,500. So I'd need to see price move above, come back, defend it, and then get going to the upside for the longs. And for the shorts, I'm going to need to be dropping below the lows of yesterday, around 4,300. Break below, come back and retest it before I start looking for any moves to the downside. So this to me is just wait and see, and earnings will more than likely impact this one, depending on what happens. If the earnings are as expected, there shouldn't be too much chaos. If it's a surprise, there is going to be a bit of chaos. Anyway, that's me for today. Hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.